Hey guys, how's it going? I'm Lewis Harding Investor and welcome back to the channel. And in today's video, I'm going to be analysing Games Workshop stock. I'm going to be using fundamental analysis to see if the company is worth buying or not. I'll be then using a DCF valuation to determine the fair value of their stock. Let's get straight into it. So who are Games Workshop? So Games Workshop Group is a British manufacturer of miniature war games, and it's based in Nottingham, England. The best known products of Games Workshop is Warhammer, so Age of Sigmar and Warhammer for 40,000. It was founded back in 1975, and originally they were a manufacturer of wooden boards for games including backgammon, Mancala, Nine Men's Morris and GAW. It later became an importer of the US role-playing game Dungeons and Dragons. The company itself started promoting games associated with Lord of the Rings in 2001. It also owns Forge World. It makes like special resin miniatures and conversion kits. The company itself is listed on the London Stock Exchange and it's a constituent of the FTSE 250 index. Now let's have a look at the sales for Games Workshop, and we'll start with the sales per business, and it's split into three different categories here, so trade, online and retail. So we'll go with the 2021 figures. So trade makes up 55%, online makes up 25%, and the rest is made up of retail, 20%. Sales per region, so where do they make the sales worldwide? So 41% comes from North America, 23% Europe, 23% UK, 7% Australia, and the rest is Asia and the rest of the world. So you're quite diverse, 40%, around 40% North America, bit of Europe, bit of Asia, bit of Australia, New Zealand. Not too bad, at least it is worldwide sales. It's not just sales focused in one country. We do have a diverse, sales worldwide, which is good. Now let's take a look at Games Workshop's free cash flow over the past couple of years. Just a quick glance of probably the most important figure in terms of what I look for in a stock. How much cash are they producing? So from 2018 to 2021, they've doubled the free cash flow, which is absolutely awesome. The company's growing at a pretty decent rate, very profitable, a lot of cash flow spitting off this business. There's not much to say other than fantastic. Doubling your free cash flow in, a 3-year period? Very, very good stuff. So no complaints on this one. Now let's take a look at the Morningstar key ratios, and we'll start with the first one, which is the PE ratio of 20.5. It's been hovering around 19 and 21 over the past few months. And then what else we got? Dividend yield just over 2%, which is solid, above the market average. The S&P market average, I think it's like 1.5% or something. So it's above the market average, which is fairly decent. Looking at the fair value and profit drivers then, profitability to start with, profit margin wise, it's been increasing pretty much year on year since 2017, awesome. Very solid margins, way above the 10% I like to see. I actually like to see above 20% on most businesses, but 2021 margins of 35% rounded up, awesome. What can you say about that? Really, really good. Return on equity, very, very high once again. This business is a very high returns on invested capital, capital employed, equity, whatever you want to, whichever figure you use, it produces a lot of returns on equity and capital. So that's absolutely awesome. One thing you'll notice about this business as well, looking at the financial health, there's not much gearing going on in the business. In 2020 they did issue a little bit of debt, but before that they had no debt at all, and that gearing figure of 24% is very, very low compared to a lot of businesses worldwide. So that is awesome. They've covered the dividend and interest massively, and they've got a lot of liquidity with current ratio and quick ratio way above 1. Now let's take a look at the genuine impact stats of Games Workshop, and we'll start with the quality metrics. So as you can see, across all the different segments, so profitability, financial strength and capital allocation, it's ranking very high, so very high for profitability, strong financial strength, very sound capital allocation, lovely stuff. And a score of 286, this is one of the highest quality stocks on the genuine impact platform. So very, very good. Value wise, apparently it's looking expensive. I don't really agree with this. I don't know how it's calculating this, to be honest, because I think the value is looking quite reasonable personally, but for whatever reason, it's showing the income statement balance sheet is expensive or very expensive, but then the cash flow is cheap. Then looking at the growth metrics, bottom left corner, all very high, which is awesome. And then yeah, you can see that shield in the quality box, which basically means it's one of the best quality stocks on the platform. So yeah, interesting stats there. Now let's take a look at my analysis checklist for Games Workshop, and the current market cap of the business is just over £2 billion, so quite a small market cap company in terms of what I usually analyse, but yeah, nevertheless you'll see why I do like this company, however small it is in the grand scheme of things. P/E ratio currently 19, I know my analysis before said a little bit higher, but the stock's gone up a little bit, so hence the P/E ratio going up. Yeah, so quantitative analysis. So profitable, high returns on capital using low leverage. So this company smashes it out of the park completely. High gross margins, 70%, 5-year average. Net margins, 27%, 5-year average. Return on equity as well is way above 15% at 67% rounded. And then again, there's not a lot of debt in the business as well, with 24% long-term debt to equity and current ratio of 3. So yeah, proven ability to grow. As we've seen, Games Workshop has been growing massively. Revenues way up, net income, shareholder equity and free cash flow is all up, which is fantastic. Yeah, what can you say? It's just fantastic stuff across the board there. Great capital allocation, again, really good stuff. Long-term debt repayment. Yeah, I don't know why this is 0. This should be a red, I believe. They did issue a little bit of debt in the past 5 years, but it's not too much. I need to change it on my analysis spreadsheet. Dividend growth, yes, we've been increasing the dividend year on year. Shares are going down slightly, and good acquisitions as well. So solid capital allocation. Quality score of 100%, which is awesome. This might change with the 2022 figures, but yeah, we will have to see. But yeah, no complaints in terms of the quality of the business, in my opinion. Buy at a fair price. Well, this is where it does get interesting, because current P/E ratio is 19, price to free cash flow isn't far away at about 22, so it's below the 20 mark, which gets me interested, basically. And for a 10% return, we're looking at a share price of around £69 per share. Current share price, time of recording, well, it says 68 on here, but it's hovering around the £70 per share mark, so it's getting close to where I'd like to buy. So yeah, very, very interesting. Let's have a look at my DCF valuation to see how I got that to my valuation. Now let's have a look at my DCF valuation for Games Workshop, and my free cash flow figures have come from marketscreener.com, and I'm using a 10% discount rate for my required rate of return. Currently looking at a share price of £67 per share, but then if you add the net cash of the business on, it's showing a share price of £69 per share. Current share price is hovering around the £70 per share mark. Over the past month it's gone as low as about, I think it's £63, and it's been as high as £73 per share. So it's hovering around this figure. So yeah, very, very interesting stuff. A good quality business. It's looking like a fair price based on my return, and looking at the free cash flow, looking how much it's increasing year on year. It's not extraordinary by any means, but it just shows that even if the free cash flow doesn't grow much, you're looking like you're getting a fairly decent price, which is absolutely awesome. So what are my thoughts on Games Workshop? So full disclaimer, I do own Games Workshop now. Yeah, they hit my target price of £69 per share around a month ago, I believe it was. Can't think off the top of my head. But yeah, I analysed this company back in November time. I know it's quite a popular UK stock because it's such high quality, but it was just a bit too expensive for me at the time. I think it was around £100 per share, maybe £95 per share. It just needs to drop to my target price. Over the past few months it has done so, and I've gone ahead and bought for a 10% return based on my analysis. But yeah, why do I like them? As you can see from the analysis, I've got it up here. The profitability of the business in terms of really high margins, you're talking a 5-year average of 27%. Last year was 35%. Yeah, absolutely awesome. Some of the best margins out there. In terms of a UK company, it's probably the highest quality UK company I've seen, which I love high quality and I like buying at a fair price, and that's what I've gone ahead and done. We've got really good growth, had really good past 5 years. I don't expect it to be as good as that forever, but as long as we can maintain a decent amount of growth with little debt, high profitability, high returns on equity, it's really, really good for me as an investor. And what I like as well, we've got really good capital allocation. they generate a lot of cash for this business, which is awesome. Good acquisitions, paying a solid dividend, which is going to increase year on year. Hopefully we get a few more share buybacks at these fair prices. Yeah, it's just really good, and it's currently at I think it's a fair valuation. It's not cheap. Cheap would be, let's say, 12-15% return, so 15% return is probably like a £45 per share price. That, in my opinion, would be cheap. I think it's a fair price, so I'm all about buying good quality companies at a fair price. And yeah, I have no complaints here. For me, this is an easy one. Really high quality, buying at a fair price, winning a chicken dinner. Can't complain too much. So there we have it. That was my quick stock analysis of Games Workshop stock. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.